In this video, we're analyzing Bitcoin, and as you guys can see, we're on the monthly chart. And on this particular chart, we can see that the market had given us this very big M structure, which has a neckline at that point, and we can see that the neckline was violated to the bottom side, and in the future, price came back to the neckline to test it. And you guys by now know that whenever we have these sort of structures, we want to see the market actually closing below that neckline, heading back to the neckline to test it. And generally speaking, where we have that neckline is where we look for further selling opportunities. So it's quite possible that at this point over here, we will see the market actually move further down into around this level over here. Why do I say this level? Number one, that is because if you actually pay attention, you will see that this double top actually started at this point. We saw the market going up, giving us this M formation over here, or a double top, and then breaking towards, or rather to the bottom side of that neckline, and then again hitting back to the neckline to test it. And as I said, at this point is where we look for those selling opportunities, and at this point again is where we expect that structure to end more or less. And that is because, as I've just said, we want to see the structure end more or less in line with where it started, right? Another reason that motivates for why the market, in my humble opinion, should come back to this level is because of that candlestick. What it is a bearish candlestick with a small body and quite a long lower wick, and where that wick ends at the bottom, there's a lot of liquidity stuck there. And as you guys by now know, liquidity is money that needs to be triggered by the market at one point or another, and the market will always go to where the market is. This, however, may take quite some time for this move to happen. It could take a couple of years or a couple of months, right? Nonetheless, let me just actually add a neckline for that double top or M structure, and we could say more or less that our neckline is at this point. And just also pay in mind, or rather keep in mind, that necklines are areas and not so much an actual line as I have it over here, right? The next thing that I'm going to do in regards to the monthly chart is to utilize the Fibonacci retracement tool, just to see if that neckline actually aligns with any key numbers that we have on the tool. So just bear with me, guys. Let's see, and there we go. And we can see, guys, that the neckline of this double top or M structure actually aligns with, we could say, the 23.6% Fibonacci retracement level, and this adds as further confluence and confirmation that at this point indeed we should potentially be looking for selling opportunities. Having said that, we're not just going to sell at that level where we have the neckline. We're going to look for further reasons for why at this level we should be selling, right? Anyway, from here what I'm going to do is head down to the weekly chart. However, before I do so, I just also want to point out that at this level over here, we actually have this doji, right? And it's actually a bullish candle with a relatively small body and quite a long upper wick. And what it tells us is that at the top where that wick ends, there's a lot of money stuck there, and that we may potentially actually see the market push further up to where that candlestick ends, and then only push further down because there's a lot of money stuck at that level. Anyway, let's move down to the weekly chart, and here we are on the weekly chart. Let's see. Just to recap, remember, on the monthly chart we spoke about how we have this over here, which has a neckline at that level, and we saw price breaking to the bottom side of that neckline, heading back up to that neckline to test it. And I said at this point is where we should be looking for those potential selling opportunities, especially because this level also aligns with the 23.6% Fibonacci retracement level. And yeah, let's proceed. What else do we see, guys, at this point? As much as we have this M structure over here, I hope you guys can also see that we also have what seems to be an inverted head and shoulders pattern at that point or that level, which has also a neckline at that point. And I know that some of you are questioning as to whether or not this is indeed an inverted head and shoulders pattern. In my humble opinion, it is, but it's not a perfect head and shoulders pattern as we have in textbooks, right? Nonetheless, it is a head and shoulders pattern in my humble opinion. I'm just going to add a neckline for that structure as well. We could say more or less that the neckline is at that level, and just also remember that necklines, as I said, are areas and not so much actual lines. What else do we see in regards to this pattern, or rather this chart? Another thing that I see that is also very much important is that we have this candlestick over here, and what it is a bearish candlestick with a small body and quite a long lower wick, and it too tells us that at the bottom where that candlestick ends, we have a lot of liquidity stuck there, and in the future we will see the market head down to those levels, or that level rather, to grab that liquidity, right? And also remember that when it comes to inverted head and shoulders patterns, right, let me just actually draw that properly. When it comes to inverted head and shoulders patterns, right, we want to see the market actually closing above that neckline and then coming back to the neckline to test it. And at this point where the neckline is where we normally look for those potential buying opportunities, especially if this level where we have the neckline aligns with any key numbers in regards to Fibonacci. So as much as I said earlier, guys, that at this point over here where we have the neckline of that huge M structure, we should be looking for potential selling opportunities. Even if we do sell at this point, I believe that our first take profit should be this level over here. Why do I say this level? That is because, as I said earlier, we have this level over here, which is the neckline of this inverted head and shoulders pattern, and it's now also a very strong level of support, and that is because we've had multiple levels or areas of rejection at that point, and in the future we might see the market reject again at this point, only to continue to push further up, right? So as much as I said earlier, guys, that at this point we should be selling and that we might potentially see the market push further down to those levels that I spoke about, it is also quite possible that even if we do indeed sell at this point, the market may only push further down to around this level, and at this level only continue to push up. So if we do indeed find a selling opportunity at this point, our take profit should be at this level, and at this level is where we will evaluate again and see as to whether the market will go this way or this way, right? Anyway, let's proceed, right? From here, what I'm going to do is head down to the daily chart. However, before I do so, I also just want to point out that whenever we have inverted head and shoulders patterns, what normally happens is that a lot of traders and investors buy at this level and again at this level, and once again once price closes above the neckline, placing their stop losses just below. So there is a lot of money stuck in this area in the form of stop losses, and we may actually see the market push further down to grab all of those losses only to move further up, and this would give us a very nice huge multi-session W structure. I hope you guys can see that. Anyway, let's head down to the daily chart, and here we are on the daily chart. Let's have a look, let's have a look, let's have a look. Just to recap, remember on the monthly chart we spoke about that huge M structure which has a neckline at that level, and on the weekly chart we spoke about how we have this inverted head and shoulders pattern which has a neckline at that point, and we also mentioned that should at this level we do indeed sell, our first take profit should be this level, and at this level we will then evaluate as to whether we believe the market will head up or continue to move further down, because as I said, we have a lot of liquidity at these levels in the form of stop losses, and stop losses are money that needs to be triggered by the market at one point or another, right? Anyway, here we are on the daily chart, and let's zoom in and see what exactly is happening. In fact, before we proceed, I just want to add my channel, and just bear with me while I do so. And there goes our channel, there goes our channel, and let's have a look, let's have a look, let's have a look, let's have a look. So in as far as the daily chart goes, we can see that the market is in an upward trending market, or in an upward trajectory, as you guys can see. And as I said, at this level the market is at a very strong level of resistance, and at this point we should indeed be looking for those potential selling opportunities. So let's zoom in and see what else is happening in regards to the daily chart. On the daily chart we can see that we also have another pattern over here, which is a head and shoulders pattern, which has this side as the left shoulder, this being the head, and this is the right shoulder. And we can also see that the neckline is at this level, right? So I can tell you now that a lot of traders and investors have sold at this point because they see, or they saw the formation of the head and shoulders pattern. Others are actually waiting for the market to close below the neckline, and they will be selling. And as I said, their first take profit will be this level. Why that level? That is because it's a very strong level of support at this point in time. And just also bear in mind that we spoke about that huge inverted head and shoulders pattern on the bigger time frames. Just remember that, right? and I said to you guys that should price from where it is move to this level, at this level we will then evaluate as to whether the market will continue to move further up or further down, right? Anyway, I'm just going to add a neckline for that head and shoulders pattern, and just bear with me while I do so. Again, remember, necklines are areas, they are not lines, they are areas. So in other words, we could say that, if I can just show you, we can say actually that this entire area over here, for example, this entire area over here is the neckline of this head and shoulders pattern, right? It's not a line, but just for purposes of making sure that our charts are clean, we'll just have it as a line, such as this line over here. There we go, right? And also guys, this head and shoulders pattern started at this level, in my humble opinion, right, where we saw the market move further up, and it is quite possible that we might see it end at this level over here, where we also have that candlestick that I spoke about earlier that's carrying that liquidity. And I said to you guys that wherever we have liquidity areas, the market needs to head to those levels, because those liquidity areas are actually money, and the markets will always go to where the money is, right? So we might actually see the market move down, disregarding this level over here, which is a very strong level of support, and the neckline of the inverted head and shoulders pattern, come all the way to this level, and at this level we might again potentially look for buying opportunities. But just also bear in mind that we have this opposing channel, and we may possibly see the market bounce off of the area only to move further up. So what I'm doing at this point in time is just speculating and just showing you some of the possible outcomes that we may experience in as far as Bitcoin is concerned. Anyway, from here what I'm going to do is head down to the H4 chart. Just keep in mind that at this point in time we're looking at this pattern, which is a head and shoulders pattern, right? Here we are on the H4 chart, and let's have a look in terms of what's happening. Let's have a look. We spoke about this area. We said it's a very strong level of resistance. We spoke about how we have this head and shoulders pattern. We also spoke about how we have this level over here, which is the neckline of that head and shoulders pattern. We also spoke about how we have this level over here, which is a very strong level of support, and the neckline of that inverted head and shoulders pattern that we spoke about on the weekly chart. And I said to you guys that should at this point we find a selling opportunity, our first take profit should be this level over here, which is a very strong level of support, and the neckline of that huge inverted head and shoulders pattern. So what else do we see guys on this chart now that we are on the H4 chart? Let's zoom in and see. In fact, before we continue guys, I just want to make sure that my channel is accurate. Just bear with me. Let's see channel. That should be fine. There we go. The next thing that I'm going to do in regards to the H4 chart is actually add my H4 channel as well. Let's see, how would I add my H4 channel in this regard? I would add it in this manner. Just bear with me guys. There we go. We could say that this is our H4 channel, and let's zoom in, right? So in as far as the H4 chart goes, we can see that we are also in an upward trending market, right? And as I said guys, let me just zoom in. A lot of people actually sold at this point, because that's the second leg, or rather the right shoulder of the head and shoulders pattern. Others are actually waiting for the market to close below this level, and once it does so, at this level is where they will be looking for further selling opportunities to around this level over here, and at this level again they will evaluate. That's what I said, right? Guys, I'm only repeating myself just to make sure that you guys understand exactly what it is that I'm referring to, and also to make sure that you don't get confused by the multiple lines and drawings that I have on my chart, right? But what else do we see on the H4 chart that we should be paying attention to? I would say the H4 chart is very much choppy. It's very much choppy. Yes, this is the right hand shoulder of that head and shoulders pattern, but if you zoom in, you will see that we had W structure over here, or a double top, which had a neckline at that point. Price broke to the upside of that neckline, came back to the neckline to test it, and at this point went up again, but then played around in this area again, and it actually formed what we call a triple top at this point, which also has a neckline at that point. We saw price break to the bottom side of that neckline, heading back to the neckline to test it, and we can see that there seems to be some sort of rejection at this point, and we might potentially see the market actually move further down to around this level, right? In fact, let me just add a neckline. Just bear with me. Let me just add a neckline for the triple top. This is the neckline, in my humble opinion, of this triple top. And just remember that necklines are areas, guys. They are not lines, they are areas, right? So it's the neckline, as I said, of this triple top over here. We saw the neckline being broken there. Price went back to test the neckline, pushed down again, and then we saw the market push further up. In my humble opinion, I would say that it is quite possible that after price, or after the market closed below this neckline, it went up to test it, and a lot of people at this point sold, and the anticipation was for the market to move further down. But because these people had their stop losses just above here, I believe that this was just a stop hunt, and that we may potentially actually see the market from where it is move further down, right, to complete this triple top that I just spoke about right now. Can you guys see that, right? So what I'm saying, in other words, is that my bias actually is for the market to move further down from where it is. Having said that, just also note that whenever we have triple tops, just as we have double tops, a lot of traders and investors sell on the second leg as well as on the third leg of that triple top, and they place their stop losses just above, right? So it is also quite possible that because a lot of people sold at this point and again at this point and place their stop losses just above, we may see the market actually move further up to grab all of those stop losses that are at this point, and then again we might see the market just retest this very important resistance area, and then again we might see the market push further down, right? But myself personally, in as far as the hype that's going around in the media about the crypto market rather, pushing further up, I think it's a bit premature because there's still a lot of money stuck below, in my humble opinion, and I believe that over the next couple of weeks and even months we may potentially see the crypto market move further down.